I'm Rich Edwards, your host and CEO of Mindspan Systems. Today we're diving into a critical topic that affects every financial institution: building better digital experiences. Let me start with what is likely a familiar point. In my conversations with community banks and credit unions across the country, I consistently hear one priority rising to the top: the need to improve digital channels. This push is often driven by several factors: staying relevant with younger consumers and commercial clients, competing with aggressive fintech and neobanks, and fighting the perception that local institutions are antiquated and irrelevant. The urgency around digital transformation has never been higher. This is such a common concern that analysts estimate financial institutions worldwide will spend over $9 billion this year on digital banking solutions. That's an incredible number, and it's growing well into the double digits year over year. But what's even more striking is how often these investments fail to deliver their expected value. According to Gartner, more than half of digital transformation initiatives either fail to meet expectations or they deliver less value than anticipated. This failure rate isn't just about technology implementation. It often stems from a fundamental misalignment between what institutions think their customers want and what those customers actually need. We see this play out in feature bloat, often adding capabilities because competitors have them rather than they solve real problems for your specific customer base, or in overly complicated interfaces that try to be all things to all people, rather than focusing on what matters most to your core segment. This brings me to a critical trap that many institutions fall into. You cannot simply buy a successful digital experience. Now, don't misunderstand me. This isn't about the age-old build versus buy debate. There are plenty of excellent tools and platforms out there, and developing your own bespoke solution can also be a viable path. The right choice depends more on looking inwards at your institution's capabilities, core competencies, and where you want to invest, whether for excellence or efficiency. There are plenty of examples of smaller community FIs successfully building their own unique solutions. For example, Climate First of Central Florida and their homegrown solar loan origination platform. And many larger institutions have had success buying or completely outsourcing their app and web experience. This is not a one-size-fits-all or silver bullet approach. The real trap here lies in confusing experience with mere look and feel. Yes, appearance, branding, interface, UI of your app or website or ATM are all important, but they're just the surface level of what is a truly meaningful digital experience. And when it's successful, it's often only the last step of a deeper and more valuable resource. Let me share this quote from our recent conversation with Nimbus CMO Jody Guetta.
You can't just replicate what the bank or credit union is doing next to you and thinking that it can work for your FI. And that's why the work that we're doing is definitely hard work. One of the things I've really observed over my career, and particularly when I entered into the industry, the conversations that I was having with bank executives around the boardroom, when we talked about growth, in my point of view, it was very kind of one-dimensional. It was, we need more loans, we need more deposits, we need more non-interest income. It was these big, high-level types of growth strategies, but there was such a missed opportunity on really talking about the details of the strategy, that who are we really trying to serve? What problems are we really trying to overcome? And the kind of mindset that I was seeing was there was just these levers that needed to be pulled at times that maintained a balance sheet in a healthy way. It mitigated risk, it kept a healthy balance sheet, and there was good margin there. And they're all very important things. But I think what was really missing from a lot of the strategies or neglected aspects of the strategies were really about what are the specific things we need to do to solve a specific market problem.
This is where design thinking comes in. For those unfamiliar with the term, design thinking is an approach to innovation that focuses on the user. The techniques and tools force an outside-in approach which put the needs of people first and then matches to the possibilities of technology and the requirements for business success. In practical terms, design thinking, as developed at places like Stanford's D School or the renowned design firm IDEO, typically follow 5 key stages: empathize, define, ideate, prototype, and test. But in banking, this framework needs to be adapted to account for the regulatory requirements, risk management, and unique trust relationship financial institutions have with their customers. Think about account opening. From the institution's perspective, it's a series of required steps: identity verification, KYC, AML compliance, initial deposit, disclosures, etc. But from the customer's perspective, it's part of a much larger journey. Maybe starting a business, saving for college, or planning for retirement. Design thinking helps bridge this gap by starting with the customer's broader context and then finding ways to meet regulatory requirements while still supporting their larger goals. One powerful practice from design thinking that you can start using immediately is the concept of the low-fidelity prototype. This doesn't mean launching half-baked products. Rather, it's about finding ways to test ideas quickly before making any major investments. For example, before rebuilding your small business loan application process, try mapping out the new flow with paper and sticky notes. Walk a couple of business customers through it, getting their feedback. You can even create a concierge prototype where you manually provide the experience that you're eventually going to automate. Have a relationship manager walk through the proposed process with actual customers, documenting their pain points and the opportunities. This approach gives you valuable insights at a fraction of the cost and time of traditional development, and it's completely compatible with banking's regulatory requirements since you're testing the process, not deploying untested technology. Design thinking enables this by making user requirements a consistent and top goal. The empathize phase, for instance, needs to go beyond traditional user research to understand not just what customers say they want, but their underlying financial behaviors, concerns, and aspirations. Those needs are then balanced against competing constraints like compliance requirements as you progress to design and prototyping. Rather than an afterthought or lost in a list of other requirements, customer needs, particularly the emotional components tied to their journey far beyond your product or service, take center stage and push you towards the experience that stands out. At its core, design thinking is built around a seemingly unusual pairing: discipline and empathy. It's about building a systematic approach to understanding your community and those you serve better than anyone else. This isn't just about occasional focus groups or annual surveys. It's about building empathy into your institution's DNA, into your daily operating model. To quote world-renowned spy novelist John le Carre, "A desk is a dangerous place from which to watch the world." You cannot truly understand your customers' needs unless you're interacting and, more importantly, listening to them. This requires a deliberate and consistent effort to get out there, observe, listen, and learn. The power of this approach is that it forces you to challenge your assumptions. Often, what we think customers want based on our internal perceptions is quite different from what they actually need. The mobile check deposit limits, for example. Many institutions set those based on risk models and operational concerns without fully understanding the impact on different customer segments like small business or gig economy workers. Remember this: the only value that matters is differentiated value, both positive and negative. Understanding what makes your institution different, what unique needs you serve, and yes, even where you might be falling short, is essential to building relevant experiences that resonate with your community. This is particularly crucial in the context of community banking, where your competitive advantage isn't going to come from having more features or flashier technology than the bigger banks. It's going to come from deeply understanding and serving your specific market in a ways that larger institutions can't or won't. Let's think about what this means in practice. Big banks might focus on building universal solutions that work for everyone. You have the advantage of knowing your community's economic cycles, its business patterns, and unique challenges. Farming communities have different cash flow patterns than a tourist town. A region with a lot of government contractors has different payroll needs than one built around small retail businesses. These insights, when properly integrated into your digital strategy, become powerful differentiators. The key is to stop thinking about digital banking as a separate channel or an add-on service. Instead, view it as another way to express and deliver your institution's unique value proposition. Your digital experience should feel like a natural extension of your community presence, not a departure from it. So let me leave you with 3 actionable steps that you can start today. 1. If you don't have this already, build a regular practice of customer observation. Schedule time each month to watch how people interact with your digital tools. Don't just rely on feedback. Observe their actual behavior. The key here is consistency. Make it a regular part of your routine, not a one-time exercise. 2, create a systematic way to capture and share insights across your organization. This could be as simple as a shared document or as sophisticated as a dedicated customer insight platform. The key is making it accessible and actionable. Considering creating a simple framework from capturing observations like, what did you see? What surprised you? What questions did it raise? 3, before any digital initiative, ask yourself, how does this reinforce what makes us different? If you can't answer that question clearly, it might be time to step back and reassess. This question should be part of your standard project evaluation process, right alongside traditional metrics like ROI and risk assessment. That's all for today's episode. If you're interested in learning more about design thinking, I highly recommend checking out The Design of Everyday Things by Donald Norman. It's a classic. It's a fantastic introduction to the concept. Stanford University's D School, or the School of Design, also offers a bunch of resources and tools to help get you started. For a deeper dive into how these concepts apply specifically to financial services, I'd recommend exploring the work of Lemire and Lau in their book Beyond Good, which explores how financial institutions create both profit and social impact through better design. You can also check out IDEO's financial experience design practice. They have several excellent case studies on their website. You'll find links to all of these more in our show notes. Thank you for listening, and remember, true digital transformation isn't about technology, it's about people.